The Lal Street slipped for the week gone by. We had the second straight week of losses. Both the Sensex and the Nifty, they were down about 1%. If you look at the mid-cap index, it almost was down 2%. And the IT sector was one of the biggest laggards. However, on the flip side, FMCG stocks, pharma stocks, they were batting for the bulls. Over the next 30 minutes, we will take stock of the week gone by on the street. We'll tell you what to expect from the earnings season. We'll also put the spotlight on the mega deal in the pharma space. I'm talking about, of course, Glenmark Pharma. And we will make some sense of what the mutual fund flows are telling us in terms of the market's appetite for more stocks and more paper. Hello and welcome to the Editors Roundtable. I'm Surabhi Upadhyay, and with me, my colleagues Nigel D'Souza, Nimesh Shah and Ekta Batra. And also, to make our Friday far more interesting and livelier, we have with us Mahesh Nadurkar, MD and Head of Research at Jefferies India. Guys, hi to all of you. Thank God it's Friday. And Mahesh, welcome to the show.
Thank you. It's good to be back here again.
So there are four of us.
Exactly like 4 months or so, I think.
Yeah. There are lots of corporate deals. There's earnings season. There is the tariff news. And there are 4 of us waiting to grill you. I'm just putting out the disclaimer at the start of the show.
I think he's used to it. I think first let's start off the show by just giving a complete recap of what went on during the week. As Surabhi mentioned, the markets end a little bit lower, 1% down, all frontline indices. The Nifty Bank, small cap, mid cap, all of them down 1%. You'll say, what a boring week, right? But there's plenty of action actually. And as Nimesh and me had discussed earlier as well, the BSE SME index was up 5.5%. So there are plenty of stocks that were in focus from the broader markets, telling you the sentiment is still pretty much okay. And from the global markets, the Bitcoin made a fresh all-time high. So that's telling you it's still risk-on, in spite of what President Trump is saying. He's going after Powell, tariffs, and lots of global headlines. But still, you have the Bitcoin moving up, which is sometimes an indicator of the risk-on sentiment. The VIX didn't spike up. At times, the Nifty ended low, but the VIX as well cooled off. And the VIX is still below that 12-odd mark, which is telling you that still there is no big fear in the market. So that's another data point. Well, capital market plays, they got hit harder this week. The defense plays as well. Remember, they rallied very, very hard in the initial part of 2025. For this week itself, both of them were down close to around 2%. While we had 2 stars this week. One was Glenmark Pharma, which Ekta is going to be telling us more about, that big global licensing deal. So stock-specific action continued. The stock, after rallying 18%, it put on another 15% on Friday. And in this week, it was up close to 20%. And HUL, everyone was saying, no returns for the last few years, no returns. And this week, you got 8% return on HUL. So the rejig at the top, the street is optimistic, maybe, in fact, running a little bit ahead of itself for some. But otherwise, many believe that the proven track record that Priya comes in with, maybe, in fact, she can turn things around. And finally, what are we looking at now? Trump's tariffs, Q2 earnings, as well as will there be any kind of positive commentary coming in from the Fed? Because some on the street globally are expecting maybe a surprise cut. Maybe that's a little far-fetched, but at least commentary is something that we'll be tracking. I think we continue to remain in this range, 25,000 on the downside, 25,750 on the upside. Well, Mahesh, I want to come to a question to you. When you were here 3 or 4 months ago, as you said, and we are all waiting to grill you, but at that point of time, sentiment was very, very somber. And you said if the time is there to buy, maybe it's now. And you sounded far more optimistic than most voices we heard. How are you feeling about the markets right now? Because we're not at 21,700, we're at 25,000 plus levels.
Yeah, thanks for remembering that previous one, because I'm quite glad that, I came here and discussed market view with all of you guys at that time. And thankfully, that call has worked quite well.
Come often. Tell us the call.
Yeah, no, I think at this point in time, things are obviously not looking that rosy from the market outlook perspective, in the sense that, okay, it has done well already. And as you mentioned that, some of the indicators are showing a bit of a risk on, as you mentioned. But I guess if you take a view from a 6-month or a 12-month perspective, I would say it's very difficult to take a very bullish view at this point in time. One is that valuations, have moved up. In fact, we've been highlighting that if you exclude the banks and financials, the 1-year forward PE multiple is 26 times. And the earnings growth is about 12-13%. So that growth versus value equation is not that great. Secondly, we also have this big onslaught of equity paper supply, right? So I think keeping all these things in mind, it looks like the next 6 to 12 months, I think the market will most likely move sideways. Obviously, there will be enough bottom-up stock ideas, sector ideas that would work out well. But at a broader market level, difficult to take a very bullish view.
So time-wise correction is what we could look for. But if you were to give a price-wise correction, could that be large? Or do you think the near-term bottom is in place at around that 21,500, 22,000?
If it wasn't for the big improvement that we are seeing in foreign inflows. I mean, if you would remember, until March 2025, foreigners were like consistent net sellers, almost like $2 to $3 billion, some months even $10 billion a month. Over the last 3 months, we have seen that thing changing materially, right? From that -2 to 3, we are now like plus $2 billion a month. So that's been a big sort of swinging factor on the positive side. On the negative side, the domestic flows are holding up well, but at a much lower level than what we were used to seeing most part of last year. So I think what is happening is domestic flows have come down, the foreign flows have gone up, essentially offsetting each other. But if for whatever reason there were to be some slowdown in the global inflows, maybe we can see absolute correction as well. But my base case is that of a time correction, as you mentioned.
On the flows, and we'll talk about this in more detail in just a bit, because I think if we go beyond the headline surface, the flows picture is not that bad. I'll come to that in a bit, because you have to look at flows now on the hybrid side as well, because hybrid funds are also investing partially in the equity market. So more on that in a bit. But, Mahesh, I think we'll all agree that the fuel of any bull market ultimately is earnings, and that's what we want to talk to you about. But I know Nimesh has done a lot of, research on this in terms of consensus views on the street, expectations. So, Nimesh?
So, Surbhi, I'll go to the wall, but bottom line is we're expecting a weak quarter. So, the starting point is not something which we are too bullish on. So, in that sense, market seems to be, having a bit of a sense that this is going to be a weak quarter. So, I'll explain what the consensus view from the market is. So, for this quarter, broadly the sense is that this will be a weak quarter, but it will set a tone for a very strong September quarter. So, don't look too much into this quarter, but it will be a base for the next quarter. That's a broad consensus view. In fact, most of them are forecasting the Nifty 50 earnings to be 7 to 10%. This is going to be quite heartening because in the last 4 quarters, we've been reporting single-digit growth on the Nifty. So in that sense, it's going to be slightly better off. The low base of last year, as well as the early festive season, is going to set the tone for at least the domestic companies in this quarter as well as in the next quarter. And what RBI has done with front loading of the RBI cut, there's going to be a potential impact on a lot of the financial names as well. So that's going to be a trigger to watch out for in the very near term and for this quarter as well. So that's overall picture. I'll go with sectors which are going to do well to start with. These are the 4-5 sectors which are expected to do well in Q1. Construction materials, which is basically the cement companies, they're expected to do well. Healthcare services, renewable energy and telecom services. These are the 4 sectors which are expected to relatively do better earnings in Q1. Now look at some sectors which are going to report only single-digit earnings growth in Q1. And that includes consumer durables and apparels, electric utilities, IT services, as well as gas utilities and transport sectors. So these are the 4-5 sectors which are expected to report only single-digit earnings growth in Q1. So that's the second set. The third set is where the street is anticipating a very weak earnings, and that includes automobiles, especially Tata Motors is going to drag the auto numbers down this quarter. Banks are going to report weak. Consumer staples are going to report weak numbers. So is gas utilities and transportation. So these are the 5 sectors which are expected to report weak earnings in Q1. Now comes the important part, which is some of the individual stocks. Citi puts out this note every quarter, and according to them, some of the companies which are expected to report positive surprises in Q1, which includes SBI Life, Britannia, Delivery, RBL Bank and Eicher Motors. These are the 5 stocks which Citi believes is expected to report a positive surprise in Q1. Equally, there are going to be some negative surprises as well in Q1 earnings, and that includes names like JSPL, Titan, which has already reported a weak Q1, Hyundai, as well as Tech Mahindra. So these are the 4-5 names which Citi believes are expected to report weak earnings. So net, this quarter earnings are going to be weak, but I guess that's going to set the tone for the September quarter, which is expected to be very strong. So that sums up. Mahesh, what's your broad view on the earnings for this quarter, and how much to read into for the September quarter?
Yeah, no, I think you summarized it quite well. That this June quarter is not really going to be a great quarter, and one of the reasons for that is also the fact that we've seen an early onset of monsoons. And while monsoons, one would argue, is a great news for the economy as a whole, but it does have a negative impact on a variety of things in the quarter. Right? So we had like 10 days early onset of monsoon, which has, which usually has an impact on construction activities, some real estate activities as well. Then some summer-related plays like air conditioners and fans and so on get negatively impacted. Also, the credit growth somewhat gets impacted because of all these factors. So Keeping all these things in mind, June quarter is going to be a bit of a week, and I think the September should be a bumper quarter in my view.
Right.
Because of multiple reasons. We had a very, very low base of last year because of immediately after the elections, as we all remember, there was a bit of a slowdown in the government spending. Then this time we also have early festive season. So that's the other factor.
Sure.
And possibly if the monsoons have started much earlier, maybe they recede earlier, maybe. And if that happens, then we'll have a slightly drier September. So all these factors. So I think this quarter, June quarter particularly, we're also seeing a big negative impact coming through because of the impact on the banking sector earnings.
Sure.
Because as we know, RBI has really upfronted all the tax cuts, and that does have a negative impact on the net interest margins, right? But that's a more of a timing issue because the June quarter will probably capture a large part of the negative impact on the banking sector. And as we go through ahead with the next few quarters, as the banks have already taken the deposit cuts, the NIM impact will will keep on getting lower and lower, and therefore earnings growth should improve as we go later.
Okay. So, a word on IT, because we saw what TCS reported, and generally the sense is that IT will report weak numbers. What's your sense? And you have been underweight on IT sector overall.
Yeah.
What's your sense on IT and any picks there, if not the large caps, the mid cap IT names?
Yeah, no, we believe that IT sector is going through a bad patch for sure, and we don't really see end of the tunnel just as yet.
Okay.
Because, we believe that the economic reality in the US basically implies that very difficult for any large corporations in the US to undertake the discretionary capex,
Yes.
which is really required for the IT sector to do well, for the order flow numbers to be better, which we are not seeing any signs of. And my sense is that at the margin, there is also some maybe initial impact of the AI and the fact that it requires lesser manpower and so on is also beginning to be visible. So in that context, I would say that as I said, we still are underweight on IT services. But within that, maybe some of the mid caps and small cap names, which actually can take advantage of the current situation and actually bid at an aggressive pricing or things like that, can actually grow much faster, and therefore within the segment, that's the segment within IT that we would prefer.
So just to round up the earnings conversation, Mahesh, just recap for us, which would be the 2 or 3, say, sectors which you think would be growth outliers in Q1 and then growth outliers perhaps in FY26 over the course of the year? Earnings growth.
So from earnings growth perspective, one sector that I would definitely highlight is cement. The second one that I feel is telecom services as well. Cement, because it's after a really long time that we are beginning to see some pricing momentum. And actually that matters the most because the volume growth has come down. And as we discussed, like June quarter, we'll not really see much of a volume growth because of construction getting impacted and so on. But I think for the stock prices to move, it's the cement prices that matter more than the volume growth. And what we are seeing is that after the 2 large players that have undertaken significant sector consolidation over the last 2 years or so, it looks like we are going through a period, of a breather, and maybe the larger ones are also kind of so-called like digesting the acquisitions that they have made, which then is a good time for the prices to improve, profitability to improve. So I think, so I think this sector is one of the sector, the cement sector, I mean, is where you can actually see some positive earning surprises, which is actually very difficult to come by in an environment like this.
All right, and after many, many quarters, we had some price increases that did stick as well. So that's going to be a positive. That said, the stock of the week was from Ekta's sector, the Pharma pack, Glenmark Pharma. Ekta, tell us more.
Well, yes, there's a deal which has taken place in the pharmaceutical space or in a licensing form for the first time in many years and never of this size. So yes, it's a $2 billion opportunity for Glenmark. $700 million is what they have signed in terms of in-licensing or out-licensing to AbbVie. But I just want to tell you that, R&D as a whole is a difficult path. It's not a bed of roses. In fact, there are multiple molecules which have failed before these companies have seen successes. So, for example, Glenmark, they had a respiratory molecule which failed. They had GRC 15300 for the treatment of pain, which didn't succeed. They had another one which was for for pain as well, which didn't succeed. Now, separately, even Spark had something of a rough path, and they still haven't seen that kind of success, though I'll come to what the opportunities are there. But for Parkinson's and psoriasis and dermatitis, they had two molecules which didn't really see the light of day. Now, also Suvain, remember that they had SUVN 502 for Alzheimer's. That was really something that the street banked on, but that didn't go through as well. But what are the opportunities that the street is probably looking at when it comes to R&D? So I'll start with Wockhardt. They have the antibiotic WCK 5222. The market size is expected to be $9 billion globally. They're looking at launching in the US in 26-27. They may look at out-licensing when it comes to this particular molecule. Now, when it comes to Spark, they have SBO 154, which is an oncology drug in the pipeline, and it's basically antibody drug conjugates. The deal value in the past 5 years in this particular segment itself has been around $300 billion, giving you a sense in terms of the kind of opportunity that exists. Origin by Dr. Reddy's, that's also another segment. It's their arm. So they have collaborated with Curis to develop a type of immunotherapy for cancer. And remember that oncology is the hottest space when it comes to R&D. Zydus, they do have a liver molecule, sarglitazar, so it's quite a popular one. It's currently received fast track as well as orphan drug status from the US FDA, so that basically speeds things up. And lastly, we have even Biocon, which has Bicara, so they own around 11%. Biocon owns 11% in Bicara, so that's another one to watch out for, whether or not that is something that they would be able to monetize. So yes, finally, we've seen a big deal taking place in R&D. But Mahesh, I wanted your thoughts on the entire pharmaceutical space, because that's really buzzing in terms of deals. We had the JB Chemical, Torrent Pharma deal that took place, and now this deal with Glenmark.
Yeah, no, I think pharma sector, if I just sort of broad-base, the overall healthcare sector has, been one of the better performing sectors, like YTD and I would say like last 1 year or so. But within that, I would still say that the fact that some of the statements that are coming out of President Mr. Trump and threatening some very high level of tariffs, maybe 12 months, 18 months, etc. down the line, I don't know whether that really transpires or not, because we've seen many times and that Mr. Trump announcing something and then not really sort of following through on that, and we've seen like several examples of that. But I think at some point in time that uncertainty is still is going to be there. So in that context, I would much rather prefer like domestic medical services like the hospitals as a much better bet, although we have had a negative news on that one as well. Just yesterday, with the government trying to say that, okay, they're looking at ways in which to kind of, curb some of the insurance, claims and, and the pricing for that. But I guess, but still from a long-term perspective, hospital still looks like a very attractive sector.
I just want to interrupt you there. Apollo had this big restructuring that they announced. Any specific view that you would have on hospitals and the kind of digitization theme that they're playing?
Yeah, no, I think, without getting into the stock-specific angle here, but as I said, hospitals as a theme is looking very interesting, for sure. I think what we're clearly seeing is that, the consumers or people's sort of propensity to spend on getting high-quality medical care is going up, and even in smaller towns and villages as well. And that's why we've seen a very quick turnaround to profitability of some of the new hospitals that have come up in like Lucknow and Patna, etc. So I think that space is definitely very, very interesting for sure.
Okay, all right. Well, on that healthy note, we have to take a quick break. We'll come back and continue this conversation with Mahesh in just a bit.